Hi, welcome to Market in a Minute. This is where we analyze the markets looking for opportunities, but most importantly, protecting our downside when we think we need to. We're finding quite a bit of opportunities in the markets. Remember, about 2 or 3 weeks ago, we got more aggressive on our equity positions, and then we're letting it ride currently. But we also bought the 20-year Treasury, the TLT. So we're also bullish on the bond market. This week, we're going to get the CPI and PPI reports. So we think the inflation numbers are cooling, and we're looking for a very modest increase in inflation on a month-over-month basis. So 0.10% for both the CPI and PPI when reported. Our main concern has been, one, money printing, and that's going the other direction. We're seeing money supply starting to contract. That's also somewhat of a negative. But the money supply contracting is good for inflation. But energy prices have come down. So you can see here the 1 year price of oil has declined by 13%, and the 1 month down by 6%. So oil or energy is going to be less of an impact, maybe a positive impact on lower CPI and PPI reports going forward. Last week, we were really somewhat disturbed by the 30-year Treasury auction. The Treasury auctioned $24 billion of 30-year bonds, and the primary dealers had to take 25% of the auction. That's negative. That's not good. I'm not an expert in Treasury auctions. I somewhat look at it, but I've been in the business for 38 years. That's high. For the primary dealers to take that amount, that's concerning. However, we think the CPI and PPI reports a continued contraction in that money supply, and the lower inflationary numbers will put a backstop on the bond market. If not, we need to get a lot more defensive. So what's working in the markets? So you go back and look at where the most recent bottom was on October 27th. The Nasdaq's been the big winner, up 8.5% from that point. The S&P 500 not far behind at 6.4, EFA at 4.4. The equal weight S&P 500, okay, lagging again. The big cap tech stocks are doing really well, is up only 4%. And the Russell 2000 that ripped coming out of this is now contracted from that point and is up only 2.8%. We think that there's a lot of opportunity in the Russell 2000, so the small cap stocks. The NASDAQ is actually now up 3% from the start of 2022. So if you just held the NASDAQ, you're up about 3% over almost a 2-year period. The Russell 2000, this is where all the value is in the markets, is now down about 24% from early 2022. So it's got massive upside catch up to do. There's tons of attractive stocks in the Russell 2000. So what are we doing? We're looking for a spot to get more aggressive. So we think that the Russell 2000 is going to be the big winner in 2024. So what's happening is you're seeing a lot of tax loss selling occur. People are getting out of their losers, taking the tax loss to lower their taxes, and then that should be kind of wiped out by sometime in December. So there's a lot to do. We think it's actually occurring now. That's why we saw this decline in those stocks, in our opinion. That's why those stocks aren't performing well. There's one more thing to think about. When the Fed starts cutting interest rates, this group is going to be a major winner. However, we got some things in front of us before that occurs. We're likely going to have a modest recession in 2024. That'll bring the entire stock market down, and there will be a bigger buying opportunity. But in the short term, we're looking for a spot to own the Russell 2000. Now, speaking of small cap, we have a very compelling small cap biotech idea. This is Fortress Bio. So this is a company that creates biotechnology companies. So they go out and they find interesting drugs that they license and bring into a company. They put management around it, and then they spin it off into an IPO, and that's how they make their money. They get the benefit of the upside of that new company that they created. They have a number of companies that they created, and there's some really interesting catalysts coming in 2024, which should drive that stock up a lot higher. When you look at the stock, this is $8. This is not very long ago. This is 3 months ago. So what happened? Well, they reverse split their shares. So that's a big no-no, right? And then they did a stock offering where they applied warrants to it. Generally, if this would occur, I'd be long gone, wouldn't care about it, but we see it as a buying opportunity. The CEO of the company, the chairman of the company, bought a lot of stock on that secondary offering. He got the warrants as well. We think that's what drove the stock down, and it sets up as a compelling opportunity. You look here at the market cap of the company. This is a 10-year period. The market cap generally is around $150, $140 million market cap, and it ranges from 50 up to over 400. So it is way at the bottom. So roughly $20 million market cap after the stock offering. We think it goes back to somewhere around its average market cap of that $140 million market cap, say over a 12-month period. As this news comes out sometime in 2024, they collect a lot of cash from it. Probably that cash might equal the same as the $140 million market cap that we're expecting. So here's a 7x type of return where there's a major insider buying the stock, and we're buying it right at the bottom. Knock on wood, we think it's the bottom. So thank you very much. Please hit like, hit subscribe. Come to my website, Patrick Adams CFA, and sign up for Market in a Minute to get a hard copy of it. And if you are an investor or an investment advisor and you want more information, please send me an email and we'll set up a call and we'll walk through some of the things that we're doing. Take care.